Rolex watch prices once high have fallen sharply, decreasing by as much as 30% from their peak in 2022. However, some models have seen their value rise significantly, leading to auction houses frequently setting new record prices. With Rolex prices on the decline, what does this mean for the future of the brand? In this video, we'll dive into the factors behind the drop in Rolex prices and what it could mean for the company's future. In recent months, the prices of used Rolex watches have fallen in the secondary market, while entry-level models in brands like Cartier and Omega have shown better performance. This cautious trend continues despite the price surges seen in 2021 and early 2022. During the pandemic, prices for pre-owned Rolex and other famous models reached record highs in the secondary market. However, a significant downturn began in April 2022, partly due to higher interest rates and the collapse of many cryptocurrencies. This noticeable decline is influenced by various factors, including the bursting of the luxury watch market bubble during the pandemic. Many investors turned to luxury watches as a safe haven for their investments, causing an artificial surge in demand and prices peaking in early 2022. However, as economic growth slowed and concerns about inflation rose, investors started selling off their watch collections, leading to a considerable price drop. In February 2022, Rolex prices reached their peak, hitting a high of $60,000 on the index. However, this upward trend was short-lived, as prices took a sharp decline by the end of the year, plummeting to $36,000. Currently, they hover around $34,000. This significant drop can be attributed to a bubble that formed in the watch market, particularly affecting Rolex prices. Speculative investors rushed to acquire Rolex watches, with hopes of making substantial profits, causing an artificial surge in both demand and prices. As the bubble inevitably burst, demand for Rolex professional models dwindled, leading to the decline in prices. Over the past 6 months, many watches featured in the Bloomberg Subdial Watch Index, including those from prestigious brands like Patek Philippe, Audemars Piguet, and Rolex, have maintained prices on the secondary market that exceed their listed retail prices. However, since late 2022, there has been widespread speculation on Wall Street about potential Federal Reserve interest rate hikes, which could disrupt the US economy and stock market. Despite the broader economy showing resilience, the tightening of monetary policy has contributed to a noticeable downturn, particularly in the secondary market for luxury watches. The Comprehensive Market Index for Watches, which tracks the prices of 60 timepieces from renowned brands like Rolex, Patek Philippe, and Audemars Piguet, has seen a notable decline of 32% since March 2022. This decline can be attributed to several factors, including increased production and supply, as well as the establishment of new factories, particularly in the case of Rolex. In response to growing demand, Rolex has been steadily increasing its watch production in recent years. While this expanded supply has helped meet the rising interest in Rolex watches, it has also led to downward pressure on the prices. Additionally, the decrease in demand for luxury watches can be linked to rising interest rates and a reduction in consumer spending on non-essential items like electronics, furniture, and apparel. Consumers are prioritizing economizing, which has affected the demand for luxury watches. Interestingly, despite the overall decline in demand for luxury watches, prices for certain high-end models such as those from Omega are experiencing an upward trend, surpassing even some high-end Swiss models. This dynamic suggests a shifting landscape in the luxury watch market, with some brands experiencing fluctuations in demand and pricing amid changing economic conditions. As consumer preferences shift towards seeking rare and undervalued timepieces, there's a noticeable trend towards smaller-sized watches. Despite the overall decline in demand, Rolex has achieved record-high levels of watch supply. Even during the pandemic, Rolex experienced only brief interruptions in production, consistently maintaining output within the standard range of 800,000 to 1 million watches per year. Notably, Rolex is actively investing in new factories and plans to increase shipments in the coming months, particularly targeting the growing demand in the Asian market. Adapting to these changing market dynamics, Rolex has introduced a certified pre-owned program. Authorized dealers now offer pre-owned Rolex watches that undergo thorough authentication and servicing by Rolex itself. This initiative aims to simplify the process for consumers buying and selling pre-owned Rolex watches. The increased competition in the secondary market, driven by this program, has led to a decline in prices. These certified pre-owned watches come with comprehensive documentation, adding to their overall value. While Rolex doesn't directly set the prices for certified pre-owned watches, individual retailers determine them based on market demand and other factors. The competitive landscape among dealers in the market for Rolex certified pre-owned watches has led to a downward trend in prices as they vie with one another, resulting in a race to the bottom in pricing. With more dealers entering the market, competition is intensifying, driving prices down. Some retailers are even setting prices for their certified pre-owned watches at rates 50% higher than the standard pre-owned market value for the same model. However, this competitive pricing dynamic is causing an overall decline in pre-owned prices, establishing a self-sustaining cycle. While this trend may initially seem challenging for sellers, it ultimately benefits buyers who can take advantage of the resulting lower prices, bringing balance and standardization to the market. Lower prices contribute to market recovery and normalization, benefiting buyers in the long run. The ongoing decline in Rolex prices is viewed as the market self-correcting after the burst of the bubble, indicating a gradual return to standard levels rather than a sudden downturn. Similar price decreases are observed in other luxury watch brands, like Omega and Vacheron Constantin. Notably, Cartier stands out for maintaining pricing stability and not following the same trend. The future strategy of Rolex is uncertain, particularly in light of shifting consumer preferences, notably among younger generations, who show less enthusiasm for luxury watches compared to previous generations. This trend is influenced by the growing popularity of smartwatches and other wearable technology. As a result, demand for Rolex watches has diminished from its previous levels. Whether it's an opportune moment to acquire a Rolex depends on your objective. If your goal is personal satisfaction, and owning a Rolex brings you joy, there's never a disadvantageous time for such a purchase. Rolex watches consistently retain their value over time, and market fluctuations should not deter you. However, if your primary aim is quick financial gain, purchasing a Rolex solely for investment purposes may not be advisable due to the unpredictable nature of the market. In response to these challenges, Rolex's forward-looking strategy focuses on enhancing both supply and demand. This involves constructing new facilities and increasing production to meet the rising demand for its watches. Additionally, the brand is prioritizing expanding its presence in the Asian market, recognizing significant potential for luxury watches in that region. This strategic approach aims to ensure Rolex remains competitive and relevant in the evolving landscape of the luxury watch industry. The surge in demand for luxury watches, including Rolex, is notably driven by the Asian market, where increasing wealth and disposable income in countries like China and India are fueling interest in high-end timepieces. As more individuals in these regions seek to invest in luxury watches, Rolex is posed to benefit from this growing demand. The brand's strategy to meet this demand through increased supply is expected to further solidify its position in the market. The recent decline in Rolex prices can be attributed to the bursting of a speculative bubble and subsequent market adjustments. The increase in supply, along with the introduction of the Rolex Certified Pre-Owned program, has played a significant role in driving prices down. However, despite these fluctuations, acquiring a Rolex for personal satisfaction remains a wise decision, unaffected by market variations. Rolex is actively adapting its strategy to align with changing demand dynamics and capitalize on growth opportunities, particularly in the flourishing Asian market. What are your thoughts on the reasons behind the Rolex prices we shared in this video? If you enjoyed the video, we would appreciate it if you let us know by leaving a comment and giving it a thumbs up. Don't forget to follow our channel for more content. Thank you for joining us here at Ventichic. Make sure to subscribe to our channel to stay updated on future releases. We'll see you in the next video.